Hey everyone, how are things going? We have a couple of cool things on the menu for today. GME ripping to highs again, and Q's rebounding. Earnings season coming to an end. It's going to be an interesting live today. We're going to be covering all of that in the next half hour or less. For those of you that may be new to the stream, my name is Sean Ryan. I'm the co-founder of Predicting Alpha, and we run this morning stream here to give traders a chance to look at things through a bit of a different lens, to see what it's like when you take a quantitative approach to trading, trying to take advantage of the markets with the data on your side. So, with that being said, I'm going to quickly send off a couple of links here so that traders are able to join us today on this stream. And besides that, we are going to hop right into it. Let me just go over to my favorite little group here, the Out of Options boys. My second favorite after the, third favorite after PA and what's Steven's group called again? The Option Trade Meetup group. All right. So GME, let's get right into that here. GME's on a big move, guys. But this time, it's a little different than what we saw before. This time, it's just grinding up. Big moves to the upside, grinding up. It's not like what we saw before, where it was just like 100% a day for a couple days, up, down. It's just grinding up this time. I'm not saying that it's not going to come back down, but it's a little different than what we saw last time, right? It's a little different. And you can see that reflected in this RV and IV here, right? Where it's moving a little differently now, right? Let's move down to the 1 month here. You can see we had that little pop, but it's just flat now. It's just staying. Whereas if we look over here, it was like up, down, just absolutely insane. So there's a few things that we can look and try and do on GME. All right. First thing that we can, it always starts with what your view is, right? The question that you always want to ask is, what is your view? Are you bullish on GME? Right? At the end of the day, it doesn't, some people, people in the trading space sometimes frustrate me because they'll look at a company like GME and they'll say, oh, this thing can't possibly be, this thing has to come back down today, right? Oh, or they'll say like, I don't even look at GME. It's crazy to look at GME. Who would look at this thing? And I've heard enough people who are like smart traders say that, where, you know what, maybe have a bit of fun with it. Take a little gamble, or if you have an idea, you should trade it, right? You should trade it. Make sure your idea is not just coming from a place of FOMO, but really from a place of seeing, is there something I can exploit here? I'll give you guys an example. How can I do this? Let's see. If we go to the term structure analyzer, all right, let's pull up GME here. And let's see, what was the, when did we have this pop here? Okay, Jan 27 and Feb 5th. Let's see what that looks like if we come here. Let's go to Jan 27 and let's go to Feb 5th, just see if that works. Let's see, that's the 27. That's the 5. Okay, no, so that's maybe, let's go back to the 21st here. Okay, it's somewhere in between, I think. Jan 27, Feb 1st. I'm trying to find where it was that the further dated vols were just like crazy through the roof. Just give me a second. Let me see here. Trying to find this for you guys. There was one point where these were like way up there, just like way up there. Okay, well, here's my point. So basically the term structure here was all the way up at around like 300, 250. And that was for the 2-year options, right? And at that point, you're looking at GME, and sure, it's realizing a ton of vol today, but it was implying it over a 2-year period, and that clearly just doesn't make sense. So we could have been there, even with all the chaos going on, selling those. And Jordan and I actually know someone who was doing that and made $1 million doing it. Literally made $1 million doing it. And it took like a couple of days to play out. It was like in no time, right? As soon as the hype started to die off, the trade started to come through, and they made a ton of money in a really, really short period of time, looking at something that most people just shook their head at and said, I would never look at this, right? And that's usually where you can find opportunity. Now, I'm not just saying you go out and buy a call. Now some people are going to do that and they're going to make money. But we want to try and be, smart about it, right? Is there something we can take advantage of? Is there a trade that we can place, right? And what I'm sort of looking at is, if you're bullish, there's a couple ideas, right? If you come in here and you take, if you're like really bullish on this thing, you think it's going to land somewhere above $400 in the next month, you can place some crazy trades, right? Like check this one out, right? Look at this. So this is let's see if we move this forward a bit actually. Okay, look at this. Right, you can do this for the March expiry monthlies or the Aprils. It's about the exact same trade. A little bit cheaper on the Aprils, but check this out, right? If you think this thing's going to land around, between, what is it, $410 and $700, right? A huge range. Basically, if you're bullish in the next month, you can put yourself in a spot where if it lands in this range 1 month from now, you're going to make an absurd amount of money, right? 2,000% on whatever you risk. Now you can put $1,000 into this and maybe make up to 20 grand if the stock lands around $600, right? Now, obviously, we all know that GME is not necessarily on paper worth $600, but it's on paper not really worth $300 either, yet here we are today, right? So it's not always just about what it's worth on paper. It's what's going on in the market right now, right? So there's a lot of opportunity out there like this. You can probably structure something similar to the downside if that's what you're thinking as well. Let's come take a look what we can maybe do here. Right, let's see. All right, let's buy unbalanced butterfly to the downside. We'll go 300, maybe let's try 200 and 150. All right, actually, this isn't too great, but let's see. Let's see if we make it a little wider, maybe. Let's do 300. Maybe even, let's try 100. And a 50. No, that's not great. Oh, 200. Okay, no, so that would be let's do a 300, 150. Oh, let's go a bit out of the money. So let's go 250. $250 down to $150, and then 100. Right, you can get something like this going on. Right, you're getting your 1 to 8 risk reward. You could do something like this to the downside, something like this to the upside. Right, you're getting a lot more leverage on the upside here. There's a ton more skew to take advantage of. But there's ideas out there, right? There's ways to take advantage of it and express a view that you have without just having to YOLO it on a call or a put, right? Now, obviously the calls and the puts would make money if we got a move like this as well. Let's see what the call would do. Let's see here. If you bought the 290 call, right? Wow, it's $117. That's wild. Let's see here. All right, where was our break even or our max profit on the butterfly? Was that around $600? Right, you're making about 20 to 1 on the six. If it lands at $600 in a month, on this you're making. Here let's bring this down to a 1. You're risking 11 grand for 1. To make 24 grand, right? So you're gonna only make 2 times, like it's crazy. You're only gonna make 2 times your money here on this if it has that huge jump, right? It's so we don't want to be doing this, right, guys? We want to be a little smarter about the way we're placing our trades. That's definitely what we want to be doing. Let's see if we sell this back ratio here. 290 put. We're going to sell 2 of, how far should we go out here? Right. The deltas on this are crazy, right? The delta 50 is all the way up here at 520. Maybe if we do like the 210. Let's see. I don't know if I'd be doing a back ratio here, but right, you'd have to go way wider than this. Right, because there's a good chance it could go down to, $50. Right, it's a pretty steep drop off here, guys. But there's money. There's money on the table. You'd maybe want to go like 290. Well, I honestly, I'd have to spend some time thinking about what I'd structure this as. Like you can't go that far out. You'd end up doing something like this. And it's okay. It's an okay trade. It's just, it really depends on what you're thinking, right? Do you think this thing, you get a little bit of payoff to the upside, but your real payoff is if it drops by about 50%. However, when we look at how this thing's actually been moving, I think we got to bet on a bigger move than that, right? We got to bet on this thing either going up, 100% or going down, 75%, 80%. Right, in the next month, we should see a lot of volatility in this thing. Now, what I'm kind of wondering is maybe you could gamma scalp this, but it's so expensive, it's probably not worth it at this point. I don't think I would be doing that. I would probably just be doing some sort of fly to the up or downside. I tried looking at the butterfly or the verticals as well. There wasn't really anything too exciting on the verticals, to be honest. It wasn't really doing it for me. It was like you could get like a 1 to 5 risk reward, pretty pricey. You have to go pretty far out of the money. It just wasn't really worth it. Right? That March 19th expiry fly was okay though as well. Right? If you think this thing's going to rip up in the short term still, something like this might be the way to go. Right? This is pretty crazy. Just a betting on it ripping up in the next week and a half or so. Pretty wild. So yeah, that's my idea for GME, guys. A nice 1-3-2 fly to the up or downside. You're getting a lot more leverage to the upside just because that skew is just crazy to the upside right now. And just that level of vol is so high, right? The level of vol is just through the roof. But we have a couple of other trades. Or Joey's saying here, for the fly, do you want to close it at the end of the last day if it's pinning? Yeah, so if we look at how the fly makes its money, right? So this is us at inception, right? We're over here right now. Right, look at how we make our money, right? If we are on, the 15th, right? So about, 5 days, let's say the 16th actually. Or the 15th, yeah. Right? You're making money if the stock's moved up, but let's say it's pinning on that day. Well, you're making 300%. If Monday next week it's up here at 600, but so you make 300% on the Monday. If you wait till the Tuesday, you're making 400%. If you wait till the Wednesday, 450%. Then it goes 550%. On the 19th, it's 800%. And then on the 20th, it goes from making 800% to making 1,800%. Right? So it's that last day that makes the most money. Right? And that's why we like to trade these a little bit shorter term. Right? It's easier to get, it's more realistic to try and pin something in the short term than in the long term, right? Trying to pick an exact price is really, really challenging. So it's very rare that I've actually gotten like a full pin where on the last day it's like right here. I haven't really had many of those, but there's a lot of situations where you end up like this, right? You're a couple days away, and you're somewhere in this range and you're like, okay, I'm up 500%, 400%. It's awesome. Right? It's still better leverage than you were getting with the call or anything of that nature. So yeah. Yeah, exactly, Eric. It's a little tricky. But, you end up in a pretty good situation like this. And on that last day, you're taking home 95% of it, even if you don't do that. Eric, have you ever got like a full pin, like to the end, basically right on the money? Let me know. Let the guys know in the chat. Micah, how did you know about that, man? Are you in Toronto? Yeah, it definitely caught me off guard. I thought someone was calling me. I was like, I warned you guys not to call me during the live. Nice, Micah. Yeah, man. Jordan and I are living out in Waterloo right now. We got a nice little spot out here. Got involved with a few of the startup incubators like Communitech, things like that. It's pretty cool. How much of your profit did you get, Eric? Let's see here. I'm going to move on to another stock, though, while we're at it, guys. We have two earnings that we want to look at today. We have JD and Oracle. And then we're going to talk about this earnings season quick. We're going to talk about earnings. This has been a really, really phenomenal earnings season. Yeah, nice, Micah. Yeah, it's good to see it too. Have you, Micah, when you were in school, did you ever participate in the TMX competition? Let's see here. So JD today, we only have two earnings today, guys, because earnings season's coming to an end. We're gonna have to wait a month to get back into the weeds on earnings here, guys. But that's okay, because that means I got to start looking for some other stuff. Hey, Mike. Okay, guess what? So for the TMX competition last year, guess who was team? So one team was called. So the one that ended December 2020. Team Predicting Alpha came first place. And the one that ended December 2019, Team RSI Only came first place. And that was the PA team on both of those. Yeah, it's pretty tough, man. It's definitely a tricky competition. But we took home the first place prize 2 years in a row. We didn't participate in the February ones. We just did the December ones. But 2019 December and 2020 December, we came first place. Yeah, man. It was definitely a fun ride. It was funny though. In the 2019 one, we didn't call the team Predicting Alpha. It was called RSI Only. It's just a little joke, and I was like, why the hell did we do this? But then the 2021, we wisened up and called the team Predicting Alpha. Mogul's asking, currently at work, but I managed to quickly check in. Mogul, what's going on, man? Hope you're doing well. You're asking, what's your opinion on shorting Bitcoin? So here's the thing that I think about Bitcoin, guys. Nobody actually knows what this thing's worth. All right, nobody knows if Bitcoin should be worth 10 grand, $100, $100,000. Nobody really knows. And the way you know that is there's no agreement in the market, right? Every analyst of Bitcoin tells you a different price, right? So what does that make it good for, right? It's obviously not something that you want to be setting a price target on because nobody knows what it's worth. But what you could do is you could trend follow it. Right? So if Bitcoin's trending up, you want to be buying it. If Bitcoin's trending down, you want to be selling it. And if you're, a little more sophisticated, you should, build out like an actual, like maybe an EMA system, right? When the 50 crosses the 200, I'm going to buy. When it crosses back down, I'm going to sell. And you want to back test it, see how that would have performed, and definitely consider doing that. It'd be the way I would play it. Just recently, though, we picked up a little bit of Bitcoin just for a little bit of exposure to it. Nothing crazy, though. Enough to care, but not enough to crush the book if it were to fall flat. So I hope that helps. Micah saying Bitcoin trends down slowly but spikes up violently. Shorting Bitcoin is like shorting the VIX. Eric saying it's as risky as shorting GME. Haha. Could be, man. It could be. Right? Intraday trades only. I dig it. That's not a bad idea. But it might be worth checking, like, what's the overnight risk premium on Bitcoin, right? Because Bitcoin's also trades 24 hours a day, right? So I wonder if there's any overnight risk on it that might be worth trading. Right? You want to have a look into all these different types of ideas and strategies, right? Buying at, close, selling at open, intraday trading, right? See how these different things perform. EMA trend following systems, SMA trend following. You definitely want to take a look at these things. So quickly, guys, we got a couple earnings here, right? We got JD earnings. Take a look at this. Directionally, there's no real edge on either one, right? Puts don't make money buying them. Calls don't really make money buying them. The straddle definitely does not make money buying it. But what we can see is the implied move has come down a lot. Take it easy, Mogul. We'll see you around. Right, the implied move is sitting at about 6% right now, and that's right in line with the average move. Right? And the average implied move is about 7.1. I'm not seeing a huge edge here. It looks pretty fair value. Might be an opportunity to take a bit of a long vol play then. Whenever the expected value is 0, I usually look to buy some vol. It's a little hedge. But for this strategy, I don't know if I would take it in an earnings play. Let's see how the straddle price changes around the events. Right, you could get a pretty cheap ride on some long vol here. Right, you pick it up. Let's have a look at what it would look like. Come over here to JD. Let's see. I trade the March 12. Come here, stocks trading at 89 bucks. Let's buy a straddle. It's going to cost us $5 to put this on. Right, so let's see what this position will look like tomorrow morning. We got to come over here, use our trusty little non-event vol. Right, vol's going to drop from 62 to 45. That's what our expected drop is. So that's what? 22, no. 22 minus a 17-point drop. It'd be a 17-point drop in vols. So let's come input that here on our vol adjuster. Minus 17. Right, this is what the trade will look like in the morning. Put on a 1 lot. Right, we're going to risk about $200 if the thing doesn't move. But given what the average move is, we're probably not risking that much on the position. Right, we'll probably see a move closer to here. And if we do get a big move, then we'll be on the right side of it. Right, we'll be able to make a lot of money. The risk is, though, that it doesn't move, and you got to be willing to accept that you're risking probably about $200 on this trade per lot that you put on. Right now, there's some conflicting views on this. One person might say, because it's in line with the average move, it's an opportunity to buy some vol. But we do have that, we have this negative straddle P&L, and B, the level of implied move, it's it's pretty in the middle. You could say it's if we look at the moves here, right, it does have small moves, right? There are times where it moves 2.5% or 1%. And there's a lot of times where it doesn't, right? A lot of people might say, just give this one a miss. But I'm thinking, a little bit of long vol here might not be the world's worst idea. Looking at Q1, we definitely have the potential for those big movers here. And we see them with a little bit of frequency, right? Like, maybe 10% of the time, 15% of the time, you'll actually make a lot of money. And, 50% of the time, 60% of the time, you'll come close to breaking even. And then the rest of it, you're going to take on a little bit of heat. In terms of the industry, it's right in the middle for moves. So it's not super cheap. It's not super expensive. It's just smack dab in the middle. Market has come down from what it's implying. It was implying a 7.1, on average. But this event, it's a 6. So you might want to take a look at what the analysts are saying. How much do they agree or disagree with each other? Is there a lot of, why is this implied move lower? It's not like the last move was super small, right? Last move was a little bigger, right? It moved 7.4%. So definitely worth taking a look. In terms of any sort of post-earnings announcement drift, we're actually not seeing any sort of pattern. So there's no point in, whatever happens, I wouldn't be necessarily holding it throughout the day, right? Let's say you take a long vol position, you get the move. I would still probably exit in the morning because I can't see any pattern here of, the stock jumping and then moving in the same direction. Actually, it has happened. It happens a little bit, actually. There is a bit of a drift. What am I saying? I was just looking in the wrong area to start. In the last 1, 2, 3, 4 earnings events, 5, the last year and a bit, we've seen that post-earnings announcement drift. So actually, it might be worth considering putting on a trade, right? What you could also do is maybe tomorrow morning, you could come in early in the morning and, if we get a trade in that direction, right? So let's say it jumps up, you could structure out something to the upside, right? Maybe a little vertical or something, a couple points out of the money. So a few ideas there that we can play around with. Yeah. Oh, Rob, you were thinking about doing it the other way. Okay, makes sense. Let's see here. What was the other one for today, right? So that's sort of a quick overview of JD. And then we have Oracle today as well. Sort of a similar situation, right? Vols are looking a little cheap. One reason why vols might be coming down on these tech companies is we've seen tech, vols be really expensive this season, right? Vols have been pretty damn pricey this season, leading me to believe that this might be fair value, right? JD and Oracle, I'm just thinking about it now, right? They might be pretty fair value. Given what all their competitors have moved, vols have been super expensive this season. It's been probably one of the best seasons in a long time to be short vol around earnings. Getting Better is asking, are there any strategy plans a new options trader can get? Getting Better, if you give me 2 seconds to go through Oracle here, I'll talk to you about a few ideas for new traders. And I'll share with you a couple of the ways that that this terminal is going to be evolving in the next week to accommodate new traders. It's going to be really, I think it's going to be a game-changing feature that we're adding hopefully in the next week or two. It's really what we're waiting for to start our free trial. So Oracle earnings looking a little bit cheap. It's probably close to fair value, which means it might be worth picking up some long vol here as well, so that if we do get that blowout move, we're exposed to it. But if it is fair value, we're not going to lose a ton on the position. We're just going to lose a little bit of our theta, right? So that would be what I would say here. To be honest, we don't need to dive too deep again. I can quickly pull it up for you guys, show you what it would look like. We'll stress the position, right? So we're going to come here, March 12, we want exposure just to the earnings event. We're going to come here, $72 strike. We're going to buy a straddle. Let's see what that looks like. Let's analyze this trade. Okay. So this is what it looked like at inception, right? We're going to throw this on today at the close. You can see that no P&L at the start, but now we need to adjust the position to see what it's going to look like tomorrow. And there are 2 things that we're going to change. Number 1, we are going to move this forward 1 day. So now you can see this is what the position is going to look like on March 11th, 2021. And this is what it looks like. But we have one more thing we need to change. What happens to stocks after earnings? The IV gets crushed, right? You can see IV goes down after each of these events, right? This is before the event, IV30 before, IV30 after. And the question is, how do you know what it's going to drop to? Well, that's what we do for you here in the terminal. You have the implied move at 40 right now. It's going to drop down to about 25, 26. So we're going to see about a 15-point drop in implied vols. So we can come here to this little cog, vol adjuster, and we can drop it 15 points. So check this out. Let's put on a 1 lot. This is what the position is going to look like in the morning. You're going to fall somewhere along this purple line. In the worst case scenario, stock does not move, or stock, I guess we have a little bit of negative delta. Stock moves, or a little bit of positive delta, sorry. You'll see if we move down a little bit here, our worst case scenario, we're losing about 126 bucks in the morning. If we get that slight move down, like less than 1% move down. And that's what we need to be aware of, right? Are you willing to take on that risk for the exposure to some explosive moves? Now, if we get the average implied move, right? If we get a move, let's see. What's the average implied move here? Or average move, right? 5%, right? If we get a 5% move here. All right, let's do it with this one. We will actually be making a little bit of money. And if we get what the market thinks is going to happen, we're going to be breaking even, right? Maybe losing a tiny bit of money. We'll be down, a couple bucks. So pretty straightforward trade. Anything less than the implied move, if vols are still expensive, you're going to fall somewhere along this line in the middle. You got to be okay with taking on that risk if this is a position you want to be putting on. So what I'm going to do now is I'm going to chat with Getting Better here, answer his question, then quickly talk about this earnings season and what we can expect moving forward. And then we are going to wrap up this live. So Getting Better asked, are there any strategy plans a new options trader can get? So there are a lot of strategies out there that capture different risk premiums, right? There's a lot of things that are, that are very doable without being an expert trader. But what you need to do to actually run these strategies well, right? And a lot of them are, known in the retail space, right? Back ratios, bull put spreads, hell, even like a covered call can be done okay. But there's a couple questions you want to ask yourself, right? Number one is, what factors actually make a stock a good candidate for running this strategy? And then number two, how should I be executing this strategy to express my view to the best of my ability? Right? So that's why someone would get a terminal like this, right? Off the bat, number one, you have a scanner like this that allows you to look for filters, right? Do you want to be selling into high skew? Do you want to be trading? What level of vol do you want to see? Do you want to be trading cheap or expensive options? How do you find these things? So right now, the way we have the terminal set up is you can go in and manually apply these filters. And through our education, we're teaching, what you should be looking for depending on what kind of trade you're looking for. But what we're going to be adding, hopefully in the next week or so, is strategy filters. So there'll be a button maybe right here that says bull put spread. You click the button and it'll automatically go in and apply filters, narrowing down the pool of candidates to just the ones that are best for that strategy. And then we're going to have a video series that says, here's 6 or 7 different strategies that you can run today with the PA terminal, right? And these are all positive expected value strategies that outperform the market, that over time, following them, you should be able to do pretty damn well, right? And then you basically put your own discretion on top of the filter to say, which of these do I actually want to take a trade on? And then the rest of it you'll be taught through the education. Mike, I can definitely answer that question for you, no problem. Let me just finish up here with Getting Better first. So that is the strategy plans for new option traders. But you have to remember this as well, right? In the end of the day, you want to get better at the game, right? You don't want to just be following a strategy filter because these are going to be presets, right? You might, you'll be able to tweak them as well to your own liking as you get better. So we have a whole bunch of education that you take to, basically learn how these products really work. Learn what makes something a good trade. Learn how to actually think about this game in a way that puts you in the driver's seat. Eric, in what situation are you talking about here? Are you talking about maybe going a bit out of the money? I wouldn't say it makes sense because you're actually making your money on theta for the most part with your earnings trades. You have to think about it, right? You're trading a really short-term option, right? When you reduce that theta, you reduce the gamma, it's less value. I would say it doesn't. Just without knowing the specifics of your trade there, Eric. Yeah, getting better. By the way, if you want to, I'm not sure if you've signed up for it. I'm going to type my email into the chat here. In the next week or so, I'm going to be releasing a free trial for Predicting Alpha, where you're going to get access to the terminal, all of our education, a one-on-one session with me and our community. And you'll be able to, see what it's like to trade with the data on your side. Right? Get a taste for it. And if you don't like it, you just cancel. It's completely free just to experience. So all you have to do is send me an email there asking to sign up, and then I'm just going to throw you on the list for it. And when it comes out, I'll be sending it off. I'm looking to do about 50 free trials to start, and I'm basically offering it to people coming into this stream. It hasn't been posted anywhere else yet. So yeah, just shoot me an email there if you're interested. We had another question here from Micah. Micah saying, this might be too broad, but how do you turn these individual strategies into a portfolio strategy if that's even a thing? Oh yeah, you get to hang out with all the cool people as well, like Eric. Right? Eric's an absolute rock star who's in PA. And a few of the other guys, I'm not sure if they're lurking around in the back, like Joey and Rob and Cedric's in there, Tim. I don't know. I'm not sure if these guys get tired of hearing my voice after about 20 minutes on the stream. So Mike is saying, how do you turn individual strategies into a portfolio strategy? Are options portfolios just a collection of different strategies or different trades, or is there a bigger picture to it? So it's a really good question, man. In terms of building out a portfolio, you want to be like, we did a really good video on this. You know what, Micah, if you send me an email, I'll give you access. It's one of the private videos, but I'll send it over to you. I know you're on the list for that free trial and everything, so I'll shoot it over to you, no problem. Where Jordan goes in depth on it. But what you basically want to be thinking about is you want to have your capital deployed, right? You don't want to just have your cash sitting there. You want to have your money in the market in some way. But you don't want to have all your eggs in one basket either. So what you're really looking to do, what makes you want to have all of your strategies want to have positive expectancy that outperform the market, right? You want to be able, each of your strategies independently should be able to make money. And what would make you diversify from one strategy to the other, or across two strategies, would be if they had some sort of if they weren't correlated with each other. Right, so you want to have strategy A that makes money in environment 1 and strategy B that makes money in environment 2. So regardless of what sort of regime you're in the market, or it smoothens out your P&L. You know what I mean? So you want to have uncorrelated bets, and that's how you can go about making money. Right? Now, what that does is it lowers your risk a lot, but depending on the size of your portfolio, it may not be necessary to have 5 or 6 different strategies running, right? If you have one, so for example, if you're running a medium-sized account, running earnings strategy might be just the way to do it, right? This quarter alone, you probably would have made 40%, 45% if you just hit all the earnings events, right? And you take on a lot of risk. There's a lot of variance in it, but on a smaller account, as a retail trader, who cares what your Sharpe ratio is? Right? We're not trying to raise capital here necessarily. Don't worry so much about the Sharpe ratio. Focus on your dollar return. Try to maximize that return on a smaller account. Now, if you're in a different stage of life, like, I don't know how old you are, for example, but if you were competing in the TMX last year, you're probably a young buck, like, and you can take on a little bit more risk. So I'd do something like that. But, there's a lot of strategies out there that make 15% a year, 20% a year, that if you're really focused on growing your long-term wealth more steadily with a little less stress, a little more hands-off, there's a whole bunch of stuff for that too. And in that case, you would definitely want to be diversified. So I hope that helps. Yeah, Rob. You get to see Rob's 600-pound deadlifts as well. Yeah, absolute beast. So yeah, I hope that answers your question, man. So guys, I'm going to wrap up the stream there. We're at 11:10. It's so funny. I always say this. I think this is how every single one of these streams ends. I sit here and I say, we're going to try and keep this thing to a half hour. It always goes to about 11:10. And then I sit here and say, guys, our 30-minute stream turned into a 40-minute stream. It's the same chat every day at the end. It's pretty funny. Joey's saying, I'm always here till the end. LOL. PA's been the best thing for my trading, especially going through all the BS first. Hey, you know what, Joey? First of all, thanks, man. We put a lot of time and effort into PA, and to know that it pays off for people really makes puts a smile on my face. And after trading earnings volatility for a while, I didn't think anything could make me feel emotions again. So thank you for that. Oh yeah. So changing from 2 DTE to 9 DTE reduces your losses slightly. Just an FYI on Oracle. But what about your gains, right? Let's see. Right, let's say we get a the 10%, let's say let's see. Right. Okay, let's say we get our 10% movers, right? We're either going to on the March 12th expiry per lot, we're making about 120% on our risk. Right, 120 on the risk, something like that. Let's see. Oh, Micah, if you like talking poker, we got Eric in the chat here. Eric's basically a World Poker Tour, a World Series champion, man. He's actually he funded his trading account with poker, I'm pretty sure. And we actually, within the PA community, we really, really believe in, the similarities between poker and trading. And we actually run a poker game with a little cash prize and stuff every probably 2.5, 3 weeks. Right, so let's do that versus this. Yeah, it doesn't look bad, man. Maybe this isn't a bad idea, right? Taking a little bit further out, it looks like it didn't change too much. All right, let's change this back one more time. Just let me take a quick peek. Yeah, Eric, I think it's a good idea, man. I am going to amend my previous trade idea. I'm in the same boat with Eric here, where if you're going to take this trade, I would do the 9 DTE, not the 3 DTE. Yeah, some people don't show up to poker though, like Rob. Or me. Sometimes I don't show up. It's not my fault though, guys. It's not my fault. I'm whipped. The girlfriend doesn't want me playing poker till 2 a.m. It's okay though. I'll be there for the next one. I promise. I don't know, man. We'll have to start the tournament late. She actually goes to bed pretty early, so we just start the tournament, at 10 p.m. Eastern Standard, and then I'll be able to show up. Very good. Yeah, Micah, it's honestly it's a really cool group we have. I really, really enjoy it. We're all pretty serious. We all have a lot of fun as well. It's how can I put this? We all sort of come to a point where we sort of believe in the same principles when it comes to betting, right? And it leads to a lot of fun and a lot of inside jokes, things like that. It's cool. I really, really like it. Oh yeah, Rob, you're out in the first 15. See, I'm thinking you were just you had whoever you lost all your money to in the first 15 minutes. I feel like you and them were in cahoots trying to take down Jordan. Can't have him win 4 times in a row, right? You're like, all right, we'll double up our money into one account. One of us is going to make it to the end for sure. Well, it's actually not a bad idea. Not a bad idea at all. Nice. You guys see, next week we're actually have Hutch come on to talk about earnings with everyone on the evening live next Wednesday. That's gonna be really cool as well. Hutch is our in-house earnings specialist. He's a god at earnings. He's teaching Jordan and I about earnings now instead of the other way around. So guys, we're going to wrap up the live there. 11:15. I'm hungry. But we're going to be back at it tomorrow. Let's see how these Oracle and JD plays turn out. You got to remember this though, right? Long vol is difficult. Okay? You're going to have a lot of small losers and the occasional huge winner. And we're just trying to put ourselves in a spot where that huge winner pays for our small losers and then some. So, I'm not going to be sitting here saying, shoot. I'm not going to be saying like, shoot, it didn't pay off. Like I'm expecting a lot of these to not be winners, right? That's the nature of long vol strategies, right? Think about how often you buy a call and you make money on it. It's not all the time, but when you do, you tend to make big bucks. So, right, buying vol, that's kind of the way it works out. So with that being said, everyone, if you're new to the channel, please drop a little subscribe and a little like on the video. It's really all I ask for in return, right? And we'll be back at it tomorrow to analyze these trades, maybe do a recap of the earnings season, talk about some of the trades. It'll be a lot of fun. So we'll see you all then. Have a great day.